Welcome to the road to accreditation. In this video, you'll learn how to invest in cash flow investments without being an accredited investor. Everyone starts as a non-accredited investor, and I did too. So when I first started learning about private market investments, I kept running into the same wall. This opportunity is only available to accredited investors. It felt like some type of exclusive club or door I was not allowed to go through. But in this video, I'm going to show you exactly how accreditation works, what it actually takes to get there, and then most importantly, how much you can still do right now before you hit that status. We're going to cover three things. First, what a security actually is and why accreditation exists in the first place. And then we'll talk about the roadmap to becoming an accredited investor and everything you can invest in today, whether you're accredited or not. You have a lot more options than you think, and I'm excited to show them to you. This video is part of the Cashflow Explorer program, and we're currently at the end of level 4, always safety first. So moving in levels 5 and beyond, we're going to be getting into alternative cash flowing investments. Let's get into the first section. What is a security? So a quick disclaimer, I am not an attorney, and this is education, not advice. And securities law is strict and heavily regulated, so I need to be very careful about this. Why should I care about becoming an accredited investor? Well, remember this slide from level 2 talking about cash flow? Cash flow is that passive income that comes through your investments or business, and it is passive cash flow. Our goal is to invest in assets that pay us cash flow because this is the core financial freedom calculation. You're financially free when your cash flow is greater than your expenses. So this is it. This is what we're chasing. Whatever brings us cash flow is what we're interested in. However, many cash flow investments aren't available to everyone. A lot of them are only available to accredited investors. So in this slide, in that yellow box, all of those things are typically locked out just for accredited investors, so you really don't have as many options. So when you're browsing deals online, you might find a real estate syndication that you think looks really nice. You're like, okay, look at that self-storage facility, look at these private equity deals. But then you have this pesky thing that keeps coming up to verify your accreditation status. Or maybe you're finding another one and you're ready to join. But when you click on it to invest, you see that you need to make a soft commitment and make sure you have a verification of accreditation status through a letter from your CPA or a third-party firm. As a 506c offering, we can only accept accredited investors and must require third-party verification. Man, that stinks. Now your curiosity is just pure frustration. What does accredited even mean? Who decided this? This is stupid. And why are specific investments locked behind a status most people have never heard of? So I know that you're ready to invest in these deals, but it always feels like somebody just yanks that mask off your head and jinkies, your plan is foiled. You would have gotten away with it if it weren't for those meddling CPAs. So let's get into these investment categories and why accreditation matters. There's 4 big categories of investments. First, you have public investments. These are available on the public markets that anybody can go out and buy. The one that everybody is most familiar with are public equities. This includes stocks as well as REITs. So these are big public companies that offer equity into their companies through stocks. In this case, you're the owner of a public equity. So you actually have a little bit of ownership in a big company like Google. Next, there's also public debt. And a great example of this are bonds. You give your money to the government as debt, and then they pay you a fixed interest rate back. So that's the public investments, but you also have private investments, and these are available through private markets. And just like the left-hand side, we have equity. So this is anything within private equity. When people hear private equity, typically your mind jumps towards the business side of private equity, where you're buying businesses and rolling them up and selling them. But also owning real estate is a form of private equity because you have ownership or equity in a private asset. And then lastly, we have private debt. This includes the exact same categories where you have people that lend to business and then also for real estate projects. This is where private credit lives. As an overall theme, these are all securities. Okay, what is a security? Well, many passive investments are securities, and they're categorized in these ways. If you invest passively with somebody else and you expect to make a profit, and you're giving away control of your money to somebody else, trusting them to perform. In this case, you're giving up control for somebody else to give you a return on your investment. That makes it a security. So a lot of the investments you've already seen are all examples of securities. You got stocks and bonds, and then you have real estate. And notice that I have a passive or limited partner position here, which means you are not active. You are passively giving them money. In this case, if you're a passive partner in a rental or commercial building, it is a security. Same thing with lending. If you are a passive investor into a private or hard money lending fund, it's a security. If you invest in a formal business ownership offering as a limited partner, that is also a security. And then you have all the alternatives that include private credit, private equity, oil, and gas that are all securities. The key difference here is that private securities require accreditation. And you might think that's pretty annoying, but it's there for a reason. So, accreditation is required in private market securities for your protection. When you invest passively with somebody else, you have no control of your money. So, being an accredited investor is very important to make sure that you have the knowledge and capital to make these types of investments. I'll break this down. So, you have you, and then there's somebody called the operator, and they come to you and say, I need money to buy this real estate property. And you look at the deal and you say, okay, I like it. This checks out. So, you invest with the operator, you give them money. They do all of the work to acquire the property and then they manage it. And then the asset is completely managed by the operator, but you have a little sliver of equity in there too. So this is a form of private equity. You have ownership of a private real estate property. To give some more formal terms here, in this case, you are the limited partner or LP. So you are a partner, but you are a limited partner. You have no control in the deal, but you also have no liability. And you are investing with the general partner. They're also called the sponsor, but in general, they're the operator, the person who is running the deal. They're the ones doing all of the work. And then that asset is managed by the general partner, but it was acquired through the limited partners. Once the asset has been acquired, stabilized, and is performing according to the business plan, then the GP is going to be paying you back your investment. Accreditation is needed for private securities where you're a passive limited partner. It's because you're putting a lot of trust into the general partner. It is for your protection. So instead of you buying this property yourself, which is totally fine, you're investing through somebody else who should be a professional to run it for you. And in this case, this gap means you need to be an experienced investor, so they're going to require you to be accredited. To review securities, many passive investments are securities. And private securities, where you're a passive LP, require you to be an accredited investor. And this is to protect investors who can't financially take the hit of a bad investment. They want to make sure that you're knowledgeable and have enough net worth to weather the storm. And then these are the current accredited investor thresholds. So there's a couple different ways to hit that criteria. First is the net worth. So if your individual or joint net worth achieves $1 million or more, excluding your personal residence, then you're an accredited investor. This is how Amy and I became accredited investors. Next is income, and this looks at your annual income for the previous 2 years, and it is reasonably expected to continue for this next year as well. Individually, you need to be making $200,000 or more the previous 2 years and expected in the future. And then for joint, it's $300,000 or more and expected to continue in the future. And finally, you can actually get a professional credential that says you're an accredited investor. If you're the holder of a Series 7, 65, or Series 82 license, you are qualified. Now that you know what a security is and what it takes to become accredited, let's work on the roadmap to get there. How do you actually get started? Well, let's take a look at some of these investments that I've done. How did I get started investing if I wasn't accredited? Well, through the course up until this point, you already have the roadmap on how you become an accredited investor. Let's do a really quick review of the roadmap because to achieve the net worth and income criteria, you already have the roadmap for that. It involves level 1, financial base camp, giving every dollar a job. Building on top of that, you have level 2, get your bearings. It's where you are and where you're going. Level 3 is about packing for the journey to maximize your savings gap and then invest as much as possible. And then level 4, always safety first, protecting your downside and investing for the future. Sticking to these core principles will eventually help you achieve the net worth or income buckets that you're looking for. But of course, I'm not going to stop there. Let's get way more specific than that. So when it comes to these different roadmap options, let's start with the net worth one. So the criteria is to get to $1 million plus of net worth, not including your personal residence. This is going to be best for those working and investing consistently over a longer time. So sometimes you just got to let compound interest work, and that's what allows you to become an accredited investor. So for the roadmap here, you want to invest as much as possible and then let your wealth compound for a couple of years or even a decade. To become accredited through income, the criteria is having solo income of 200K. Once again, this is for the last 2 years and expected to continue in the future, as well as joint, which is 300K income or more. This is going to be best for high earning employees and business owners. And the roadmap is to just double down on your main source of income. So if you're close, keep working on your job hard, grow your business, and you'll get there before you know it. If you're creating an income like this and you have a good saving and investing gap, you may hit the net worth one before you hit income. And then lastly, the credentials route is really crafty because for this criteria, you need to have a financial license like an RIA or have passed the Series 7, 65, or 82 exam. This is best for people that are in the finance industry or financial services. For the roadmap, you need to study for the exam and get your certification. These are the current rules, but private markets and alternative investments are only becoming more and more accessible to everyday investors. So keep your eyes out for that. Next, let's look at the investment options. So, what do you do if you're not accredited yet? Well, there's a lot of options. How did I invest in all of these things when I was not an accredited investor? I want to break it down for you. Of all of these investments, only two of them required me to be accredited. So I want to be very clear, you still have plenty of investment options available to you. And I need to flash the slide for my own protection, but as a quick disclaimer, I am not endorsing any of the ideas or investment options you may see. I'm not recommending you invest in private securities before you're accredited, and I'm not telling you how to circumvent securities laws. These are legal methods if your desire is to get involved in private securities before you're accredited. I have so many people ask me what to do when they're not accredited, so this video is for them. As a quick reminder, anything that is on the public market are fair game. So there's a lot of ways that you can invest for cash flow through the public markets. I'm going to give you a ton of examples here. So first, you can buy stocks, ETFs, index funds, and REITs. There's also treasuries, I bonds, municipal bonds, and money market funds. You also have things like high dividend ETFs. So these pay out quarterly or monthly dividends, and they also have some growth. However, since they are stocks, they're also a little bit more volatile too, so you need to be aware of that. You also have high yield dividend ETFs. These can pay out monthly or quarterly, and you can buy them on the stock market just like any other stock. Remember, I'm not endorsing any of these things, but I want you to have all of these options available so you can do your own research. You also have business development companies, and these are public companies that lend to mid sized private businesses, and then they pass that income back to you. So they're kind of like a good proxy of what's going on in the private business market. And then you also have master limited partnerships. These are publicly traded partnerships that mostly focus on energy pipelines that also pass income back through investors. And then there's also high yield crypto products. These are offered through Strategy, formerly known as MicroStrategy, and it's all issued tied to their Bitcoin treasury. You need to do your own research for all of these things. But I know you're still wondering about these private market investments for cash flow. Well, here's how you get into the game. First, you can be active. Instead of investing money passively into a deal, you can be the active person who does all the work. So in this case, you can buy your own real estate. You can even raise capital through a joint venture structure to buy larger real estate properties, or you can even buy a business that way. You can also form your own fund or syndication as a general partner and then invest your money alongside others. You can also start your own business or your own property management company to get in the game to be around commercial real estate. So while you're still not an LP in this situation, you're active and you're getting in the game. The other way to get into these deals actually passively is through personal relationships. So there's Regulation D 506B that allows up to 35 non-accredited investors per deal, but they can't advertise the deal. And you also need to have a substantive pre-existing relationship with the sponsor. So you need to know the sponsor before they're raising money, and they're not allowed to advertise it. So that is why these deals come through your personal relationships. So if you're out and about meeting sponsors ahead of time and you're meeting operators, maybe they're buying self-storage facilities or industrial properties or mobile home parks, and you really like them, well, you could start to build the relationship. And if they offer a 506B, you can invest with them in the future. So a great way to get in the game this way as an LP is by building relationships with sponsors through mastermind groups or local meetups and conferences. You can also work your way in by engaging through sponsor newsletters and social media, and then eventually set up a virtual call to meet them. Private deals are not shut out for you. Here's a bunch of options that you have. So overview, the private investments are available through either your network or your level of activity. So you can always be active. So let's not forget, you can buy your own real estate. This is where people get into house hacking. You can do fix and flips. You can do wholesaling, short-term rentals, long-term rentals, mid-term rentals. There's so many different options of what you can do in real estate, and it also helps you gain first-party experience. Next, just like you can buy your own real estate, you can buy your own business. So instead of launching your own business, you can acquire one that is already running, that already has cash flow, that already has customers, that already has systems. This is also called ETA, or entrepreneurship through acquisition. For examples on how you get into private debt, you can do your own private and hard money lending. You can also do tax lien or tax deed investing, and you can do mortgage note investing. What's really important about private debt is you always have to make sure there is collateral on the other side. So when you're giving your money as a loan to somebody else, you have to know if that deal goes sideways, you actually have collateral that you can take and use to get your principal back. There are also regulated crowdfunding platforms and websites. To name a couple, there's Fundrise, Arrived Homes, Republic, and Percent, but I haven't personally used any of these. You can also get access to those 506B syndications through your network. You can also be the general partner and raise capital from other people. You can also join an experienced operator or sponsor team, and you can become a knowledgeable employee who can invest. I know someone in their early 20s who joined a real estate syndication firm, and he has learned so much through that company, and he's been able to invest in all of their commercial real estate deals because he's part of the team. And lastly, you can become accredited through the Series 7, 65, or 82 exams. So as you can tell, these private deals are not shut out for you. As long as you go active or are willing to network, you can wiggle your way into a lot more deals than you think. So outside of becoming accredited, there are two other ways to get into these private investments. First, by being the active partner, and then second, through your personal relationships. But you have to very carefully vet the investments that you'll see. You'll be extremely tempted to just get in the game, but always ask, why is this deal coming to me? I want to talk to you about retail investors. A retail investor is just kind of like an average investor who buys stocks and is not as much educated on alternative investments. When you start to see more and more alternative investments that are offered through websites or in your 401k, those likely are not the deals to do because they've probably already been passed over by a ton of people that they're now just posted on a website, and they may charge high fees as well. Truly, you get the best private market deals from who you know, and the best deals are not going to be blasted out in a newsletter or on a website. And just because an investment is private doesn't mean it's better. I know it feels exclusive and really cool, but in general, the goal is to source high quality, cash flowing investments wherever they are. I don't care if they're public or private, but I want cash flow. Levels 5 through 6 of the Explorer program will go much more in depth on how you actually vet these deals. All right, so complete transparency. How did I invest in all of these deals up until this point? Well, the pharmaceutical cold storage business I invested in was a joint venture. I was actually active in this business. For this investment, it was a small local business. I gave them money as a private money loan. In this real estate syndication, I was an accredited investor. That one was more recent. For my small cakes cupcake business bakery loan, that was private money lending, so it was private debt. In the case of the distillery business acquisition, that one is also structured as a joint venture. For the mobile home park syndication that I invested in, I met the operator well before he was raising capital for this deal, and this deal came to me through that relationship. So it was actually a 506B syndication. Then the 10-unit apartment building that I'm a partial owner of is also structured as a joint venture. And then I did a lot of private money lending in the real estate fix and flip side of things. I've also done my first oil and gas deal, but that one is only available to accredited investors. I've also invested in a lot of high yield dividend ETFs. That is a public option available to everybody. So as you can tell, between these investments, savings account interest, and referrals and affiliate fees, this is how my cash flow has been generated. And I just want to double click on this to remember to carefully vet every deal, because this list, you can't tell right now, but includes my best investments ever, but it also includes some of my worst ones. But you wouldn't know which ones they are just looking at it, so it's pretty interesting. I can share more of that story later. All right, for your investment options and how to get started, I recommend building confidence by just being in the same room as other people who are having these conversations. So go to local investing events or join a mastermind group or community. Join just to observe at the beginning. Ask questions, be curious, and learn more, but don't do any deals at this point. Meet with sponsors and build relationships with other investors. I guarantee you the first deal that you do won't be your best one, so you want to shorten the learning curve as much as possible. I also recommend signing up for sponsor newsletters to learn more about their deals. So they will be posting what they're raising for, and it's pretty interesting to see what these projects are. And then lastly, consume more content in the alternative investments and private market space. That's why we're here at TrailMix. And then I'll also have a book list available online for you. For now, just take action by investing into your education and getting in the same rooms. There will always be deals out there. Don't pay these stupid tax. Please learn as many lessons from me as possible before you go out and do your own thing. That's why I'm making all this content. To bring us home with the takeaways, many passive cash flow investments are securities. And to invest in private deals and securities, you need to be an accredited investor. And accreditation status is for your protection, but you can achieve it through net worth, income, or certifications. As for your investment options, you can still invest, you just need to be in the right rooms, but invest into your education first. As a reminder, you have public and private markets, and you have equity and debt investments in each. You can do it all, just not at once, so pick the right rooms and get involved. For your action items, determine which of the accreditation roadmap categories is going to work best for you, and then you can start to put the steps in place to pursue it. As for your investment options, I recommend taking one action to invest in your education and continue learning more. So in this video, we learned how to invest in cash flow investments without being an accredited investor yet. Congratulations, you have finished level 4, always safety first. So grab that field guide and stamp it. What's coming up next, we're moving into level 5. Level 5 is titled Exploring Alternatives, and the next video coming up is Intro to Alternatives. This is how the 1% actually invest. I can't wait to see you there, and I hope you enjoyed level 4.